Our business editor, Stephen Carroll, joining us. Of course, the big story that Christoph was talking to us about a little bit earlier, about 5 minutes or so, the markets. How on earth are they reacting to this news, Stephen?
The short answer is there's been no great panic, but there's slight movements on the markets in relation to that result in Greece. Let's look at Greece's borrowing costs. This is what's really important because of the amount of debt that Greece is dealing with. So on the bond markets over the past couple of months, we've seen that, in fact, the price of Greece's borrowing rate, or rather Greece's benchmark borrowing rate, had been rising since the political instability had unfolded in December, and you can see that on that chart. We haven't seen any great movement on the bond markets today. Still, Greek bonds still going for about 8.5%, the yield on them for the 10-year bond, which is the benchmark lending rate. So no great movement in that area. On the currency markets, we saw the euro fall to near 11-year lows of just under $1.11 early on in Asia. As you can see, it's slightly above that level now. The market's obviously coming back. That effect obviously being outweighed on the currency markets. On the stock markets, European shares opening down, but reasonably moderate amounts. No great panic selling on the markets. When you consider that we had big gains on the European markets last year after that decision by the European Central Bank to introduce quantitative easing, this, in fact, still leaves the markets ahead on a week-on-week position. Of course, they'll be waiting to see what Alexis Tsipras does next, so we'll be waiting to see how they react.
He's got some pretty tough economic challenges ahead, though, hasn't he?
Yeah, that's right. I mean, Greece has seen an economic collapse unlike any other country in Europe during this crisis. The country lost a fifth of the value of its economy. Unemployment is the highest in Europe, and wages have fallen by a sixth. Now, it owes more than 300 billion euros in debt. Paying it back will be crippling for the country. For more on this, we can go to Athens and speak to Megan Greene. She's the chief economist at Manulife Asset Management. Megan, thank you for being with us from Athens this morning on France 24. You've been following this story for many years. What's the biggest issue facing the Greek economy now?
Well, I think the most pressing issue is that Greece will run out of money in March if it doesn't get any more funding. And there are a few ways to avoid that, but it will require one of the parties giving in pretty quickly. Now, the fact that Syriza is talking about forming a coalition with the far-right independent Greeks is worrisome because they're staunchly anti-bailout, so it suggests that the Greek government's going to go to the Troika and really play hardball.
And, I mean, is that really an option? Are they really going to get anywhere by playing hardball? I mean, the IMF, we don't expect them to do anything. The ECB doesn't look likely to either. Are they going to get any results out of putting that pressure on?
Well, they could get some results in terms of debt relief. The Troika could decide to reschedule some of their debt, kick the maturities out, reduce interest rates. The problem is the Troika isn't interested in even talking about debt relief for Greece until Greece exits its bailout program. So it's a bit of a Gordian knot. And like I said, someone's going to have to give in.
And, I mean, we heard earlier from one of the Greek MEPs, Kostas Chrysogonos, and he was saying that Greece's indebtedness is a Eurozone problem. I mean, is it still a Eurozone problem? Are we worried about knock-on effects from this?
Well, it's a Eurozone problem in that a lot of Eurozone banks and governments have exposure to Greek government debt still. I mean, it's mostly held by the official sector now. I think that probably the financial and economic contagion of what's going on in Greece can be managed. It's the political contagion that is a bigger factor. Last night, for example, around Syriza's kiosk, election kiosk, there were a ton of Spaniards. They're certainly watching what happens here closely.
What do you see is happening next? Is somebody going to cave at the Eurogroup meeting later today? Are we going to start seeing a flood of support for Greece and for Syriza?
I unfortunately don't think we'll see a flood of support. I think that Syriza and the new government, whether it's independent Greeks or another smaller party, they're going to be fighting an uphill battle in terms of trying to get some kind of concessions from the Troika. So I actually think these negotiations will be pretty protracted. But like I said, Greece runs out of money in March, so something will have to give. That might be that the ECB could allow Greece to issue more T-bills, which they could use to kind of plug the gap. Or alternatively, the final tranche in this bailout could be split into sub-tranches and could be kind of drip-fed to keep Greece on life support until it can come up with some kind of agreement with the Troika.
And even if that agreement comes, I mean, how is Greece going to get out of this economic freefall that it's been in for several years now?
Well, Greece is going to need debt relief. That much is clear. It's not going to be able to pay its debt back unless it either finds significant growth or significant inflation, and neither one of those is very likely. So Greece will need debt relief. It's just a question of when it comes and what form it comes in. I think it will come in a rescheduling of debt, but it's absolutely necessary for Greece to kind of hit the bottom and start turning around and growing. Also, a number of structural reforms still do need to be pushed through. Syriza and the independent Greeks are both dead set against them, but they're going to have to push them through if they want Greece to find sustainable growth.
Okay, Megan Greene, Chief Economist at Manulife Asset Management, thank you for speaking to us this morning from Athens. As Megan was saying, plenty more that we're going to be hearing about this over the coming weeks and months. That deadline at the end of March, not very far away.
Exactly. Something to keep Stephen busy over the next few weeks indeed.